Take a look at the biggest skew coming in this morning. Then the Federal Reserve has cut interest rates by a quarter point, setting its benchmark range to 4.5% to 4.75%. This unanimous decision then marks the second consecutive cut as the Fed adopts a more cautious approach to policy, emphasizing job support alongside inflation control as well. Officials are now balancing the risks to employment and inflation, signaling a shift towards a more employment-focused outlook in their economic assessment. Now, this move follows a larger rate cut in September, highlighting the Fed's recalibrated strategy. Then, Chairman Jerome Powell also said during his briefing that the election will have no effect on their policy decisions in the near term. In fact, when asked whether he would resign if requested to by Trump, the Fed chair simply said no. Powell subsequently also told reporters that the president does not have the power to fire or demote him. So that's the word coming in from him. And in fact, let's also go across and listen in to what exactly he had to say, because he did have some important commentary coming in terms of risks to goals that remain roughly in balance then.
The FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a quarter percentage point. We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. Recent indicators suggest that economic activity has continued to expand at a solid pace. The election will have no effects on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability.
Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
Interesting, because there was so much was being talked about Fed's political independence that could possibly go with Trump coming in, but he clearly mentioned that the elections would not have much of impact on the Fed policy. Moving on, in a more central bank action, the Bank of England has cut interest rates by 25 basis points. Now, the borrowing cost is now at 4.75%, and this is a second rate cut by the bank in this year, but has come with a caution approach also. BOE has warned the latest budget may drive up inflation by half a point, prompting the central bank to cut rates at a slower pace.
Alright, then moving on, while the Fed chair may not be pricing in the impact of elections on policy, at DoubleLine Capital CEO Jeffrey Gundlach warns interest rates could surge if Republicans gain control of the House, creating a governing trifecta with President-elect Trump. Gundlach predicts more government spending would lead to increased borrowing, pushing up bond yields, especially at the long end. In fact, he also believes that Trump's potential tax cuts and pro-stimulus stance could also further strain the U.S. fiscal outlook, putting pressure then on rates as the Fed navigates this challenging environment.
Okay, with this US weekly jobless claim, that one edged up marginally last week higher, showing little shift in the labor market despite recent hurricanes and strikes. While productivity rose at a 2.2% rate in Q3, unit labor cost also jumped by 1.9%, fueling inflation worries. Now, economists warn that rising labor costs could hinder the Fed's goal of sustaining 2% inflation.
Well, then moving on, let's get you some more news and updates. President-elect Donald Trump has appointed Susie Wiles as his White House Chief of Staff, marking her as the first woman to hold the role. Wiles, a key player in Trump's election victory, will take on one of the administration's top positions as Trump prepares for a return to the White House on January 20th. Trump also praised Wiles as tough, smart and innovative, crediting her for her role in his 2016 and 2020 campaigns.
Okay, so former Treasury Secretary Stephen Mnuchin, he said that President-elect Donald Trump's agenda will focus on tax cuts, tariff and sanctions. Mnuchin, who served under Trump from 2017 to 2021, noted that tax cuts are central to Trump's plan and would likely pass if Republicans control Congress. He also highlighted Trump's intent to use tariffs, particularly with China, to push for fair trade. Manchin expects renewed sanctions on Iran as well as Russia, targeting oil sales, and hinted at Trump tackling deficit spending, though he himself will support from outside on any official route.
All right, and that's the word coming in from former US Treasury Secretary Steven Mnuchin. But moving on, then Russian President Putin congratulated Donald Trump on his election victory, commending him for his courage during an attempted assassination at a rally as well. Putin also praised Trump's remarks on mending US-Russia relations and addressing the Ukraine crisis, calling them noteworthy. And he also expressed openness to dialogue. He also added a note of caution, though saying he's uncertain about what will follow. In fact, he confirmed that Russia is ready for discussions if the Trump administration seeks to resume contact.
Germany has appointed George Kukis as new finance minister amid mounting pressure on Chancellor Olaf Scholz to call snap elections. A close advisor to Scholz, he replaces Christine Lindner, who was dismissed after the collapse of Scholz's coalition government. The dismissal marks the end of the alliance between Scholz's SPD and Lindner's FDP and the Greens. Scholz has proposed a confidence vote in January with a possible March election.
All right, then moving on, the biggest winner from Trump's win seems to be AI darling Nvidia, which rallied to a record high, making the chip maker the first company in history to surpass a stock market value of $3.6 trillion. Its shares were lifted by broad investor optimism about tax cuts as well as lower regulations. The chip maker, in fact, also surpassed Apple's record closing market cap, which it had hit in October. The stock is up 3 times just this year alone.
Okay, moving on, Australia.
If you like this video, then like, share and subscribe to ET Now.